Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Tuesday, June 30th, 2026. A day late today, but it'll be a good one. Let's go through the economic activity release last week, and when you see the economic activity and the metrics we're going to go through, you would think equity markets had a really good week, and that's exactly the opposite, and we'll tell you why. But going through the economic data that came out last week, most of it came out Thursday, Friday. But on Thursday, initial jobless claims, better than expected. 225 expected, came in at 215. So that's good. Personal income, better than expected. For the month of May, was up 0.7. The expectation was 0.4. Personal spending, even better than expected. It was expected to be up for May, 0.6% month over month, came in 0.7. Then on the inflation, and these are the key metrics at this point, inflation metrics, PCE, core PCE, both came in exactly as expected. The headline number up 0.4% month over month in May, and the core number, ex food and energy, up 0.3% month over month. We had durable goods orders. That's not a key driver, expected to be horrible, minus 4.7% for the month of May. And it was, but not as bad. It was minus 4.5%. And the last data point for last week was an updated expectation, or I should say updated calculation of U.S. GDP growth, real GDP growth for the first quarter. The final number came in at 2.1%. The initial estimate was 0.8. Then the revised estimate was 1.6. Final determination, 2.1% GDP growth, which is very solid for an economy our size at this point. So what did that do for the markets last week? Well, in terms of inflation expectations, good. We mentioned the fact that the 10-year break-even, 10-year Treasury minus 10-year tips, has been falling after rising due to the energy price increase, U.S.-Iran conflict, but now has come back very strongly. In fact, we hit about 2.5% on this metric just weeks ago. It's now down to 2.2%. Simply saying investors believe whatever the oil prices are in the PCE number that we just showed you, expectations are those are going to drop in the future. GDP estimate for the second quarter. Just mentioned that the revised first quarter number was a positive 2.1%. The Atlanta Federal Reserve thinks the second quarter, which ends tomorrow, is expected to be a positive 2.5%. Now that expectation is down a little bit from the week before, which is 3%, off its high. At one point, the Atlanta Fed thought we were going to grow over 4%, but 2.5% would be a really good outcome because that's solid growth and not the sort of growth, the high octane growth that would lead to further inflation. In terms of the Fed funds, there is a meeting later during mid-July. Expectations of a hike, 29% built into the futures market. That was 42% last week as we went through this. No expectation whatsoever of a cut, of course. End of the year, Fed funds future market, what it's pricing in. The odds of no cut, this has come down quite a bit, 21% now, but 41% probability of one rate hike, 29% probability of two rate hikes, and a 9% probability now of three or more rate hikes. So in terms of how the markets reacted to the data we just went through for last week, again, we said the economic data looked pretty good, so you might reasonably expect decent returns in the equity markets, and it was clearly the opposite. S&P 500 last week down nearly 2%, and what really got hit were the Mag 7, the AI leverage names. Mag 7 equal weight down 5.7% last week. Growth last week in the U.S. down 2.5%. Large cap down 2.8%. Conversely, value, huge rotation to value last week, positive 2.24%, and small cap as well, positive 1.7%. So on a year-to-date basis, this is a very interesting one. We've talked about the market broadening out That's good for investors, we believe. How concentrated the U.S. market has become because of index funds, because of the AI firms doing so well. Top 10 market cap names in the U.S. representing an all-time high, 38% or so concentration. You can see this has rolled over on a year-to-date basis in looking at the Invesco S&P 500 equal weighted S&P 500. So instead of a market cap weighted S&P 500, where NVIDIA is approaching 8% of that index, Apple 7%, highly concentrated. The equal weight gives each of the 500 names a 0.2% weight. So S&P 500 up year-to-date 8%, 8.06. That equal weighting up almost 12% this year. Now, if you look over the last, since 2022, say 2023 on, S&P 500 has far outperformed the equal weighted S&P 500. But now you can see that rotation back to names, the other 493 names in the S&P 500, solid returns there. So let's take a look at international. Now, both developed markets, ex-US, and emerging markets have outperformed S&P 500 on a year-to-date basis. But like the S&P 500, both were down last week. And in particular, emerging markets, which has been the star performer this week, down 4.4%. And China, I'll just point this out. China last week down 5.9% in terms of their equities. On a year-to-date basis, China is down 16.6%. And despite that, the emerging market index year-to-date up 22.6%. China is roughly 25% of that index, simply implying that the emerging markets ex-China year-to-date basis up over 30%. Fixed income last week, a beneficiary of that concern about the high-growth names, the rotation out of tech, out of equity in total. The 2-year yield last week was down 9 basis points, as was the 10-year yield. So the Bloomberg U.S. Aggregate Bond Index was up 0.5% last week, and now on a year-to-date basis is up about 1%. So let's take a look at this week in terms of the economic data that comes out today. The JOLTS job opening data for June. I have to say this will be very interesting in that what we saw last month for the month of May was a huge increase from both the month before and expectations. That rose to 7.62%. A lot of analysts looked at it and thought maybe it was an aberration, data, whatever. And that really is reflected in the consensus expectation, which expects that number to drop from 7.62 million at the end of May to 7.3 million. Tomorrow, Wednesday, ISM Manufacturing PMI, which has been very strong after years of being below 50. But the expectation is it'll come in at 53.7, slightly down month of June, ended May at 54%. There's a speech tomorrow by Fed Chairman Kevin Warsh, first one outside of the FOMC meeting discussion. Might be interesting. In terms of the big data this week on Thursday, so we have initial claims. That will be the big one. The initial jobless claims on Thursday. Things are pushed up because of the 4th of July holiday. Initial jobless claims last week we mentioned 215,000, expected to be 220,000. But non-farm payrolls, this will be the big one. Will trump everything. Last month, the month of May, way above expectations, came in at 172,000 new jobs. Expectation for June, much more muted. Expectation consensus, 114,000. Expectation for the unemployment rate, it was 4.3% in May. It's expected to be flat. Average hourly earnings month over month in June was 0.3% in May. Also expected to be flat, plus 0.3% for May. And factory orders, about the only thing that it looks slightly negative, only because it was so strong. So for the month of April, that was up 4.8%. It's expected to be up, but only 2.1% for the month of May. So that's it for our economic update. We thank you very much for attending, and we'll look forward to seeing you next week.